Welcome to the Growth Minded Accountant podcast, where our experts will share best practices on running your firm in the digital age. This podcast is brought to you by CountingWorks Pro. Let's get started.
Welcome to another episode of the Growth Minded Accountant Podcast. My name is Lee Reams II. I'm the founder and CEO of CountingWorks, and today we're going to talk about another tax season challenge that we have been getting feedback from our client base about, and that is the overtime rules. And again, each of these, like we talked about last week on the Trump accounts, each of these might add 10 to 15 minutes of more questions, explanations. So we're going to kind of go over today what are the overtime rules, the best way to communicate with your client, and ways to have a smarter prep task list, I guess. So overtime has been one of the most misunderstood tax topics coming out of the One Big Beautiful Bill Act. A lot of workers heard overtime deduction and assumed all overtime counted, which isn't at all true. So today we're going to break down what actually qualifies, why 2025 tax season is going to be more work for tax professionals, more than they expect. And most importantly, how firms can use better client communication and technology to avoid chaos during your appointment. So who better than to walk us through this than Lee Reams Sr., our resident tax expert. Senior, how are you?
I'm doing good, thank you.
All right, so let's start here if we can kind of clear up some misconceptions. So during the election cycle, overtime was talked about as like it was just one simple bucket. But the first thing that tax pros and their clients need to learn is not all overtime qualifies. I don't totally get the FLSA define overtime counts, and then kind of how political messaging may have oversimplified the rule. But that's where the confusion starts. So why don't you start there and let's go from that point.
Well, what's happened here is they've tied this overtime deduction to the original Federal Fair Labor Standards Act, which was passed way back 1930 something. I forget what year it was. And what that does, it says that you have to pay overtime at time and a half, and overtime is defined as hours in excess of 40 hours per week. Now, most states make you overtime on a daily basis. So if somebody has, for instance, works overtime for one day, they get paid overtime in that state. But if he doesn't work 40 hours a week, then he won't get any overtime deduction on his tax return.
All right, that sounds fun. And then was this retroactive to last year? Or did employers need to report all that? Or is that what's coming up in 2026 and on that employers are required to report this?
Well, it is retroactive to 2025. However, the employers are not required to correctly report it. It's up to the individual to analyze this themselves. So it throws a lot of burden on the tax preparer. He has to go back and analyze the overtime on a weekly basis because it's based upon a 40-hour week. So if a guy's working, less than a 40, say he's working a 30-hour week, but he gets some overtime with it and doesn't come up to 40 hours, then that overtime doesn't count for the deduction.
All right, so I think this obviously is the basis of how you could create a bottleneck if each tax pro is going in and having to clean this up. And it gets even worse because not all states are complying with the federal rules. So if you could clarify that a little bit, I think that also is another kind of curveball here.
Well, for instance, California requires, like I mentioned before, overtime after 8 hours in a day. But if they don't work 40 hours that week, it doesn't meet the federal standard for overtime. So therefore, the deduction is based upon the federal standards. So that overtime would not count for the deduction. So if a guy's working overtime several days during the year, you got to go back and look at this on a weekly basis to see if the overtime counts or not. And if they get more than time and a half, you only can deduct time and a half. So
because that's from the FLSA Act that is who knows
correct.
how many decades old, and that
Correct.
just requires 1.5. So some people might get double time, for example,
You're correct.
but the federal requirement only goes up to 1.5.
Yeah. So if Joe Blow is working maybe his regular
Joe
rate of
Blow, we're calling him now. John Doe. What are we? Joe Blow. All
whatever,
right, go ahead.
whatever. Anyway, if he's working, let's say making $20 an hour, and he gets paid double time, but he gets $40 an hour, that extra $10 is not deductible overtime. Only $5 is deductible because it's only going to be 50 time and a half. So does that make sense?
No, I totally get it. I just want you to clarify, but I want to get the complexity out there to the tax professionals. And I'm wondering here now, how do we educate the clients? How do we maybe present, like prepare them before the appointment? And then you're saying next year the employers are going to be reporting this, so this will be much easier. So this is definitely just a 2025 tax year. I would call it a catastrophe in some ways, but what is the thought going forward after this year?
Well, for after this year, the employers are required to report them on the W-2. So it won't be an issue in 2026 tax returns. But because this is retroactive and the employers weren't ready for it because the law didn't pass until July 4th, uh, the they're not required to actually report it on the W-2. So it's up to the tax preparer themselves to and the taxpayer to come up with the amount. So hopefully they have pay stubs that they can bring and which should show how they're being paid for the week or whatever, however they're being paid. Uh, and then the tax preparer's got to go back and figure out, which number, what amount of that overtime it actually qualifies for the deduction. So it's really a nasty, it's not complicated, but it's laborious. It's the way to put it.
So what would you suggest then as a game plan? So I would say outbound newsletter and your social media posts, and you're talking to clients before their appointments. If you get overtime, these are the rules you need to prepare. Do you, hit them up in their intake forms? I know you've worked on a worksheet that could kind of help. Would you send this to your clients ahead of time? Like, how would you educate? How would you kind of make it so this doesn't become another 15, 20-minute delay in the tax appointment?
Well, it's going to be longer than a 15 or 20-minute delay if the individual worked a lot of overtime. You're going to probably get your staff to sit down with his payroll and go through it and figure it out ahead of time or after the fact. But you're not going to do this in your tax appointment. So,
All right, so I'm going back to how would you go about working with your client to, so first of all, the tax savings is huge. So it's more than offsets any, fee that you're going to charge your clients to calculate this. But, again, I want to hear kind of your best practice of how you would suggest doing this. How would you organize your clients and your staff? Because you don't want to, just because your staff's doing it, it needs to be efficient as well. How would you use technology to kind of help this process along? You created a worksheet. We have a Google Sheet version of it. In CountingWorks Pro, you could create a kind of an intake form specifically for this to at least take the information, but it's still the client. And so if you're on a 26-week pay cycle, you're saying you have to print out or save every single one of those pay stubs to look into whether you had overtime during those periods?
well, you're going to have something to go back and figure it out. And luckily, the IRS has also said there won't be any penalties. To use your best efforts to figure out what this overtime was. So,
Well, that was going to be my next question. This seems ripe for miscalculations, errors. I mean, is that going to come back to bite taxpayers or tax pros in a compliance side?
well, with the budget the IRS has, I don't know how they're going to check all this compliance, but they have no way to verify it themselves. So it's not like they have a W-2 to look at to see if you're doing it right. So uh, if they want to challenge you, they're going to have to challenge everybody down the line that they want to challenge, and that's going to be a problem as well for them. So on the bright side,
Because there is no IRS matching because there's no reporting from the
correct.
employers.
Yes.
Okay. So is there an issue then if I work at, and I also receive tips and work overtime? Does that create anything?
You work in the worst scenario, Lee.
Well, I mean, I had to ask, so I'm asking.
We might have to go back and look at tips as well, because that's another issue, so.
So, but how does that affect this situation? Like, explain to me if you're the tax professional, how you handling both of these issues if you got overtime and the tip issue?
They're two separate issues. So
Okay.
just handle them separately. They don't interact at all. The
Okay.
overtime is paid by the employer. The tips are what your customers give you as a bonus. So,
How would you suggest then, if you're saying this is going to take an extra half hour of work, I go back to again, how can technology do? So, what is your worksheet designed to do?
well, the worksheet breaks it down by week. So if you're on some other schedule, you got to break it back down to a weekly payroll, and assume it is time and a half. So the way my worksheet does, I just ask you what is the regular pay rate, and we take half of that, which would be the premium bonus for time and a half, and then that's the amount that's dollar value for the deduction, and then look to see how many hours exceed 40 in a week. So it's basically just a laborious job of going week by week and seeing what overtime they got those weeks and calculating each week on itself, and then summarizing all the weeks of the year that they had overtime.
So, what percentage do you think of clients that will do this versus tax pros taking on this work?
Slim to none.
So, you're saying tax pros are taking it on.
Yeah.
Okay.
Yeah,
And
tax are gonna have to figure out.
what would you think then? Again, if you earned, so let me back up. What are the thresholds on overtime? If I make more than 20, 30,000 in overtime, I mean, there's peace officers and especially California, people making hundreds of thousands of dollars in overtime. Are they hitting thresholds? What's happening with them?
It's limited to 20,000, so that's the maximum deduction.
So would that be the maximum calculation anyways for that person? You would just calculate month one or 4 months or whatever until they hit the 20 and then that would be your documentation.
That would be work, sure.
Okay. And then do you need to bring any of you these worksheets in when you file the return, or is that all kept at the tax professional's office?
The tax profession's gonna have to keep that, or his client's gonna have to keep that in their records. Yeah. And
Okay.
you don't submit those to the IRS. They just want the basic number.
Got it. And then I'm just going to finish up then on what I would consider best practices for education. So I know with CountingWorks we've created content about this already. We've sent blog articles. We've included this in the client newsletters. I think there are some workflows that maybe could organize clients a little bit better, but would you proactively, if you've segmented your clients and you know who gets overtime or not, would you send out an email ahead of time saying, hey, this is what I need. This is how it's affected if you're affected by overtime, and kind of give like a checklist of how to prepare?
Well, it's kind of hard to determine who's going to get the overtime. I guess if give a police officer or an air traffic controller or someone like that, for sure you want to, get ahead of it with them. Or a fireman, those people aren't always getting overtime. So I guess you can historically know your clients. Most people know them pretty well. But I think you're really down to the point where you got to send this notice out to all of them that you want to know if they worked overtime, and if they do, you need to contact you in advance. Or if you have staff, contact your staff and let your staff explain it to them. So
Okay. Um, I think that is awesome. I think we have put this together in a very well, kind of planned out format for our clients. So we've already, again, covered a lot of this for if you're a current CountingWorks Pro client as far as the education side. You can use our intake form to create stuff. You can also use our worksheets. We're going to include those at the bottom of the description of this particular podcast. This is, again, a really truncated, just a quick hits growth-minded accountant, but I just wanted to cover it. Again, it's another big issue. And again, the amount of money it means to your clients, if they're shielding $20,000, that's a significant amount of money. So they're going to invest in this and make sure they do it right. So hopefully this is not too big of a compliance nightmare for the industry, but I think we've covered this. Anything that I missed that you wanted to mention?
No, I think covered pretty well. It's just like I said before, it's not complicated calculation. It's just a laborious calculation. You got to look at it on a weekly basis, 40 hours, and there's 52 weeks in a year, so it's a lot of looking.
Well, again, until you get to 20, and then you're done, I guess. So, all right, that's it. Thank you for listening to the Growth Minded Accountant podcast. We have back to our regular schedule tomorrow. Again, thank you for all the followers. We broke through 6,000 subscribers last weekend. So, really excited for all the new listeners, and we'll hope to continue putting out some great content for you here in the future. So, again, thanks for being a follower of the Growth Minded Accountant podcast. Until next time.